Hey guys, Mike here. So today we're going to go over your questions, try to answer them, and also put in some comments you guys made. Really good comments, actually, enlightening people and myself in some of them. So we'll address those as well. And it's going to be a wide range of things you guys talked about and asked about, from refinancing to small caps to the 3 to 5 day rule to options ranges to a whole boatload of stuff. And so, as we always do on Saturday, let's just get right into it. Feel free to participate in the comments and ask any more questions if you have them as well. And feel free to answer some of these questions. I'll have one at the end for you guys. Now, first one here says, glad you pointed out the market cap, and this is what I was talking about, SMCI squeezing up and everything, and how it's manipulated by the traders so easily. And so many people don't understand the concept of market cap and they only think price. They think a stock is going to a certain price because some other company is trading at that price without even considering the market capitalization of both companies. The reason why I know this is because I argue with so many people on the internet about this. And this is the same reason why stocks run back to previous highs after a stock split, which we'll talk about. So many people think they are buying the stock at a 75% discount if a 4-for-1 stock split happens, though they just buy it back up to the previous highs. Now, a prime example of what's going on, Friday, yesterday that is, and actually the last 3 days, Lunar, L-U-N-R, I guess they landed some craft on the moon or whatever, but nobody cares about that. I'm here to talk about the stock. See these crazy moves? These are crazy, huge moves on this thing. And look at the moves down. I mean, the moves down are just as insane. Within like an hour, they'll take this stock down 40%, right? And then start shoving it back up. Right, and so this thing swings majorly within an hour, 20, 40%, all this crazy mess. How is it able to do this? Why are they able to do this, right? Why are the traders doing this? Because if you thought SMCI had a small float to it and a small number of shares outstanding, look at this one. 18 million shares outstanding, 15 million for the float. This stock is easy to move around. So, of course, with positive news on top of it, they can push it up, push it down. You can see it's in that wedge right now. That's how they're able to do this. Now, somebody else said, talking about the stock splits as well, NVDA has done 5 stock splits. This is true. The last one was a 4-to-1 in 2021, which is true. But I want you to look at this now. We're going to show a couple of good examples here. Who's the most famous, of course, would be Tesla, which we'll talk about. But look at NVIDIA's last stock split. All right here, it'll say split on the chart if you're looking for the stock splits, right? And if we go down, we'll try to click on it, but you can see this thing was running up, right? And it was way more expensive than this. This is the prices after the split. Okay, but you can see how massively this thing moved up. And I believe, was this a 5-for-1? No, it was a 4-for-1 stock split. So that was a 4-for-1 stock split. And you see what happened after it ran up. You're like, oh, it's way cheaper now. I can definitely buy this, right? It's only 100 and something, right? But before it was like 800, whatever it was, and they did the split. And so who is the most famous, of course? It's going to be Tesla. So when you look at this, they're going to do a stock split. That's just the way. As soon as it starts to stall out, they're going to do another stock split. That's just the way it is. You're not buying it cheaper or anything like that. And matter of fact, the shares are even more diluted. But again, it's a psychological thing. Look at Tesla. Remember when it was running up and it was almost to 1,000, or maybe it was 1,000 at that time. And what they do? They did a stock split because it was starting to stall. And they were, oh, wait a minute. People can't buy this anymore. And all of a sudden, whoa, boom, see you later, right? Everybody comes flooding back in, right? And so that's going to happen eventually. It's going to have to, right? And so next comment says, supercomputer continues to take away growth from other small caps. IWM could be even more in the gutter if it has not for SMCI to hold it up. This is actually true, which is kind of weird to me. You wouldn't think this would happen, but again, we didn't think a small cap was going to do what it did, right? And so, fun facts I put out here in Friday's news brief was the Russell 2000 is up 34 points for the year. SMCI accounts for 26 points of that. In other words, the other 1,956 stocks have added a grand total of 8 points to the index. And despite Thursday's major run-up in the other indexes, which, I mean, it was a face-ripping rally, 39% of all stocks on the New York Stock Exchange closed red, and 45% on the NASDAQ closed red. And, of course, speaking of SMCI, yes, when a small cap, which, I mean, the most heavily weighted, I think it was weighted only like 1.8% or whatever it was at the time, when it triples its market cap in less than a month, yes, that could absolutely skew things. Nobody expect that to come. What's going to be interesting in June is when they do the reconstitution, they're going to lose this one, right? And so that's going to be really interesting, taking away the biggest AI hype out of a ETF. And so we'll see what happens there. and index. So we'll see. And the next kind of explains what's happening with SMCI if you're following it, and it's a gamma squeeze, right? So I've talked about this many times with Tesla. Market makers are forced to buy up to hedge the option calls sold. The more they buy, the more the stock goes up fast, the more new calls come in, the more they have to buy again. So the premium is excessively too high due to volatility, and it all comes crashing down. You saw this, not this week, but the previous week, I believe it was, right? And so that's why it's dangerous to chase this one, but at least they have earnings to back something up, right? And a small market cap. And so, next we got... And guys, before we continue, if you could hit that like button for me, I sure would appreciate it. It helps people find this video and everything. And also, if you like the content, think about subscribing, guys. Glenn here, who's asking about the RSI. He says, I understand that indicates the stock is oversold, overbought, and I do look at it for guidance. The thing I don't get is when someone buys a stock, then someone sold it, how can it lean one way or the other? And this is pretty easy if you look at this, right? So think of not so much overbought, oversold, but momentum. That's what this is, right? Because SMCI, look, if you would have sold this thing when it got overbought, you would have sold around 200 bucks, okay? And so it's momentum, and momentum continued up. It's just getting excessive when you get to this level, right? But for something to go up, what do you have to have? More buyers than sellers, right? More importantly, what's really foolish about it, you have to have more options buyers in this market, right? So they're buying the calls, the market makers are selling the calls. This was about the gamma squeeze, right? And then the market makers have to buy the shares to end up hedging their position, okay? And so that's why this thing can stay oversold so long. But also, so hope that answers your question about more buyers and sellers. But understand what you're really looking for is the RSI divergence. When you see, that's why I say look at this more momentum than anything else, right? When you see a momentum wane and start to slow down, and the stock is still going up, that's what you want to look for as indicators. Say, oh boy, maybe I need to shave some here. If you're a trader or a short-term swing trade you're in or something like that, or even if you're just way up in a position, you're like, I don't want to sit here and lose all these gains. Let me just trim some. So that's what I like to use the RSI for more than anything else. So look at it more as momentum, not so much overbought, oversold and stuff. Now, next one comes from Jerry. Says, Mike, what is your 3 to 5 day rule on earnings, and how does that apply to both gainers and losers? And it's not an official rule, as I said. I didn't make it up. It's not my rule at all. Somebody just taught it to me, and it makes sense to me. But Tesla, for example, usually if you see something gap down, especially on earnings or something, give it 3, maybe 5 days. Some people follow 3, some people follow 5, to let it base out, to figure out where it's going to go instead of just trying to jump on it. Because a lot of people will see momentum go down or a big spike down. They go, oh, time to short it. And usually that's not the case, right? And so you can see Tesla right here, right? So you just count 3 to 5 days. It would have fooled a lot of people, okay? And so, you go over to Amazon, you basically see the same thing here, right? And so Amazon gapped way up, and what happened? It based sideways, right? And so instead of just, oh, we're just going to go long on, or, oh, I'm going to short it because there's a gap beneath it, just let it settle out. Let it figure out what's going to go, because usually the initial move is going to be the false move, okay, a lot of times. So just let it settle out, especially on earnings gap up. So I had gapped up, and people, oh, I'm going to go long right here, and boom, right? We end up going from 140 down to like 130, okay? And so just let it settle out. That's all it is. You see the same thing with, now, Palo Alto is a little different, because I said, I don't know if 3 to 5 days is going to hold on this one. And again, it depends on what's going on in the market, right? So this one drops, but then NVDA reports earnings, so the market goes absolutely insane. And you see this big pop up on this one. 2 days, we're good. Third day, now it's at this level right here we got to see. And when you start scrolling through the chart, so you got to look at this 3 to 5 day rule. You got to figure out what's going on in the market, right? And so if you're sitting there seeing things going crazy and haywire, odds are the thing's going to go back up, right? Especially if it's an overreaction. Or you look at a stock and say, wait a minute, does it have a history of just making massive overcorrections and then just heading straight back up and being manipulated? That's what you got to look at as well. So it's not just a 3 to 5 day rule. Next one comes here. It says, hey, Mike, what alerting app did you use that you told the live instant results when NVIDIA earnings came out? I don't use an app. Literally, dude, just go to Twitter. It's free. I go with this one right here, Start Market News. It comes out pretty fast. I mean, it's its own company, right? So they load up stuff pretty fast, but you can find anything for free that'll come out immediately when earnings or results. They'll put up the earnings calls, everything. And so don't pay for nothing to do that, okay? Next one here, and I apologize, it's starting to rain here in Florida. I would love to see a video on how you calculate the expected move during the week. But what I use is Thinkorswim, right? And Thinkorswim is going to give you the price right here of whatever it is you're trying to look at. So IWM, for example, right there. And this is small. I apologize, I couldn't blow it up anymore. And so all I'm doing is taking the last price. You have to do this after the market's already closed, right? And then whatever day I'm trying to calculate, which would be the next day or maybe it's the weekly, and I go over to the right and it's going to tell me what the expected move is, the percentage and the dollar amount. And then I just plus or minus it from the closing price. And so that's what gives me my daily and then my weekly. As you can see, that's what I end up using when I do these daily news briefs, especially like this. We were closed Monday, right? So this would be Tuesday. Normally this would be Monday. I'll go in here and I'll put in the weekly moves for the major stocks, the indexes, and then I'll end up doing the daily every day for the indexes, the Russell, QQQ, and the SPY is how I do it. So, and then I think you may be able to do it on Webull too, but there is a calculation. I believe it's you either put in, you just calculate up, was it a strangle or a straddle, and do it that way. But I think Webull would do it as well for you. Again, don't go out and pay for something to tell you about that stuff. And you can see, I mean, like NVDA had huge earnings, right? And it ended up closing yesterday in the range, the weekly range. The weekly range, just what? I use them as a guidance, right? So 67, 70% of the time, somewhere in there, a stock or an index will end up in that range. It may go below it, like this one went above the weekly range on Friday, but it came back in. So that's how I use it, all right? Now, next one's a comment, and it says you cannot refinance if you're underwater, though. And this is basically going to what I was talking about on Thursday when I said what are bankers doing. They're telling people who are in the finance industry, hey, buy now, buy that $500,000 house that used to be $250 2 years ago, and then when rates drop, you can refinance. And so it didn't dawn on me for a minute, but when you put that in there, yes, that's very smart. And again, I don't know if the rules have changed. I'm not in that business, so if you are, let us know. But used to, when you were underwater, so you bought 500,000, rates drop, right? And so then they'll say usually if rates are going to drop really fast because we're in a recession or whatever, but let's say the prices drop along with the rates, and all of a sudden now the house is worth $450, you paid $5, and so the bank may not refinance. I don't know the rules, so put it in the comments if you are, but normally when you're underwater you couldn't do it. We'll see if things have changed, because remember, the more desperate banks get, the more they tend to do what? Bend rules, create rules, all kinds of stuff, okay? And so that is something to think about. I want to bring it to your attention in case your banker's telling you, yeah, go ahead and buy now, you refi when the rates drop. Well, if the rates are dropping, maybe the prices are dropping too in your area. Every area is different. And so, be cautious of that, because then you go to refi and they're like, oh, yeah, we can't do it. What? And so you can't hold them to the fire. But if you're in that business, let us know in the comments. And this one right here, I'm going to let you guys answer. It says, hello, Mike. Can you share what website you use to see insider purchases and sales? I actually do not use the site at all. I don't care about insider purchases and sales because, for example, Jeff Bezos has sold $8 billion in Amazon over the last week. And guess what the Amazon stock's done? It's been just fine, right? And so people are going to take profit. It is what it is. Some of them you may look at and go, oh, okay, yeah, the stock is, they're going to drop. They know they're going to miss earnings. If it's coming up close to earnings, then maybe you can do it. But please put in the bottom any free sites, especially that you guys use for that. If you're big into it and stuff, I just don't care, because look, if I'm an executive and I got $27 billion in stock, I'm going to sell some too, right? Some of it has to do with, options. Some maybe there's one, like I said, he has, was it Blue Horizon or whatever the space thing is? Maybe people are saying that's what he's going to put his money into. $8 billion. I mean, it seems to be a lot. So he must have something going on, because usually the rich avoid taxes like crazy. And I would think he's going to have a decent tax bill on that one, I would think. I don't know how he would avoid it. But again, he has a whole skyscraper of accountants to help him do that. So yeah, please put that in the bottom. Really appreciate it. And so, feel free to put any questions in the bottom, more comments or anything. We'll try to get to them and stuff. I think I got to all of them this week, if I'm not mistaken. So if I didn't, just repost it and I'll try to get back into it and stuff. I normally don't do stock requests. Sometimes I will, but it just depends on what the stock is or whatever. So anyway, guys, tomorrow we'll end up doing a video to set up the week. We do have a lot more earnings, high beta earnings type stuff. Not too much economic data, little, some that will affect the market, but a lot of Fed speakers. It's got to be like 30 of them coming out there to speak multiple times. I always say like 10 or 12. They're speaking multiple times next week. So we'll see what, basically they're trying to lay, what kind of tracks they're trying to lay down, everything. So, and what message they're going to try to send to the market and stuff about maybe it's June, right, for the rate cuts. So anyway, hit that like and subscribe button if you got anything out of it. Really appreciate you guys and all your feedback. Appreciate all you guys who sign up for the membership and stuff. Let me know if I can do anything for you. And I will see you tomorrow.